Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. So the S&P continued to make new highs on Friday. Now the question remains if the rally can continue. Scott, what are the levels you're watching in the S&P right now?
I think at this point, the levels keep holding where they have to. Since the beginning of the year, we've been saying don't fight this rally as long as we hold the 8-day, the 21-day moving average, trade the rally versus fade the rally. And I feel like every week I have to support the thesis of higher prices because the market has been. And if you look at the chart of the S&P, you will see, since the beginning of the year, you had this really nice big gap up. Okay, this was New Year's Day or New Year's Eve. This was New Year's Day. We went sideways, built a little stair step, so to speak, then went higher. Then we built another floor above that level, and here we are. On Thursday, we broke out. Friday, we held it again, and now your pivot resistance right here is about 148.49. But overall, we've been stair-stepping higher with lots of participation across the board.
Last week, the banks were in focus, and the XLF has had a nice run. Do you think it can keep up momentum?
I think it might rotate now. The banks are out of the way. That was last week. If you look at the chart of the XLF, you will see they have led the way. You go here. This was the gap up into the new year, and it's been, slowly, methodically going higher. There's been a little bit of a mixed bag within the banks based on when you own them. Goldman Sachs had a great report. We listed it here right around 121, and this one extended all the way into new highs coming to the end of the year. At this point, I would say, trim a little bit. JP Morgan has also acted better, at highs, slowly, methodically going higher, whereas Bank of America, had a really nice move, faulty a little bit, broke below the 8 and 21 day. I would say, I would look at this 1063 as an area to buy back Bank of America if you did get out when it broke the 8 day or you did get out before earnings because that was your plan. So, but overall, banks are acting well. Just real quickly, the home builders, XHB, continue to go to highs. The transports have been tremendous from the breakout above 92, and even the industrials have been, moving higher methodically at highs. So there's been a really nice group of leading indices, and within those indices, there's been stocks providing some alpha.
Well, just like the banks were largely in focus last week, this week, all eyes will be on tech. This is a huge week for earnings, especially in tech. The Qs have been lagging. However, are you expecting it to do some catching up this week?
We shall see. We have a lot of big earnings coming out. To start, we have IBM today. We have Google today. We also have a lot coming out tomorrow. First, if you take a quick look at the chart here, you'll see on the Qs, you're right, they have been lagging. They've been hanging under this mid-level range. Here were the highs back from September. I just showed you 4 indices or so that broke above it, mainly because of Apple and some others. So if you look here at IBM, IBM right now has a lot to prove. This was last quarter's earnings. This was the big gap down. Didn't get filled, went lower. From there has been methodically putting in a lower base. For me, I would say it's going to be crucial to see what happens. Here is big resistance right down this 197. If the report is decent and it beats the 5.25, 29.1 billion revenue, you can see a move higher. You have 197, and then you have the beginning of this gap here, which is 203. If they miss again, and it starts trading below this 188, if it doesn't reclaim it quickly and breaks below 185, in my 2013 thesis, I put this as one area that might pose a little bit of a problem coming into 2013 as it's had a major run and it does have a lot of exposure to Europe and the public sector. So right now it's in this lower range. So I'd be a bit careful and know where you live with this one.
And what are your thoughts if we take a closer look at Google, which also reports today?
It's funny, I'm a little anxious when it comes to Google earnings. I want to do some kind of option strategy, and this one I feel like I have no edge. This stock last quarter, if you remember, came out with earnings intraday, and I think I was long it at that time, but you did have time to get out of the way. Since then, it's tried to repair its chart. If you take a look at the daily chart, you will see that, from that, this was the last earnings day. It went all the way down into the big moving averages into support. It's methodically went higher a little bit and it's come off. So it's not near the highs. It's not on the lows. So to me, I think I'm just going to wait to see how it reports and how it goes afterwards. If you're an investor, make sure you have some kind of collar on because who knows, if they miss, it could get beat up. Collars when you sell some calls to finance some puts if you want to stay in your stock long term. But as a trader, I'm not going into this stock long or short. I'll wait for the report and probably be trading it after hours.
And then really quickly, gold at a crucial point woke up a bit on Thursday, then retraced on Friday. What do you make of its action?
I think a lot of guys are finally trying to see it break above this descending channel. If you look at the chart here, I am long some gold still. It's trying to break above this trend line. This trend line stands right around 164.5. A close above 164, 164.5, and finally it gets set back in motion and gets a bit more interesting.
Well, lots more to talk about. We're going to be going into all of this and more in the long version, so stay with us.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.